Everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on your screen that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, as you can see, back in the Dragon capsule, let's go ahead and take a look at the market and see what happened. Just like last Friday, we were able to hold most of the gains. As you can see where we closed today on Friday, we did dip down below that 570 level, got a little bit testy there early in the trading day, but we're holding right around the 61.8% fib extension. Something interesting about that is if you've noticed on the chart, we did relabel the chart. I saw somebody made a comment about, don't worry, Rob will relabel the chart. Just as a reminder, I don't set these Elliott wave signals. They are done by the algorithm from the software. And if you haven't gotten a copy of the software, you can go directly to hub.com, HUBB.com, and get a free copy of the Elliott wave signals in the software. You get live free Elliott wave as well. But we did get a relabeling. If you remember over here, this was the wave 3 and this was the wave 5, and the chart has relabeled. It looks a little precarious with this move to the downside here, but Elliott wave is a pretty good indicator when it doesn't relabel. But I've found my experience has been when it does relabel, then that has an even greater percentage chance of happening. So perhaps we're setting up for a wave 5 bounce. We've got some work to do before we can start talking about that. But at this point here, with the support around 570, 575, and this fib support level of 61.8, my favorite of all fib levels, perhaps maybe we can bounce a little bit and mount some sort of a recovery move. It's been fairly vertical to the downside. If I add in the moving averages, you can see that we're still a bit oversold from the 10-day moving average. We got quite a bit away from the 10-day moving average on the low, so we were kind of set up for a move to the upside. But there was some economic news that came out today that kind of helped move it. First of all, we had the non-farm payrolls report that came out, and it was less than expected, but much better than feared. We all knew with the federal housing or federal employment freeze, hiring freeze, that the number wasn't going to show as many jobs added as expected, but it was a little bit better than expected. And then we had Chairman Powell speaking today, and he came out and talked about how they're going to kind of wait and see a little bit more about how the Trump policies play out. They're basically on pause a bit, but he actually even talked about how maybe they could look for rate cuts. It was interesting that he actually mentioned rate cuts if the job market begins to weaken. He didn't talk about the economy. We've seen some weakness in the economy with some of the numbers, but he was focused on the labor market. So if the labor market begins to weaken, he opened the door for rate cuts, and the market seemed to like that and turn back to the upside. The other comment that he made is one of the things that I've been talking about, is I'm really tired of hearing that word tariff. I'm sure you are as well. We know that President Trump is using that as leverage, etc. The market can handle just about anything. It gets priced in. What the market doesn't like is uncertainty, and that's what's been going on. We're going to put the tariffs on. Now we're going to pause. Oh, they're going to go back on. Maybe there'll be partial tariffs. Maybe some things will be excluded. That's the part the market doesn't like, and that's kind of led to this downward move. And Chairman Powell actually used that, saying that it's the uncertainty around it that's a problem. So I thought I would highlight that. But regardless, if things start to calm down along those lines, it was interesting that he opened the door for potential rate cuts. The market has priced in 3 rate cuts. I still think that might be a little bit aggressive, but we'll see. The labor market is performing pretty well, but he said if that starts to break down a bit, they'll come in. So back to the charts, we take a look again at the closing price, still below the 10-day moving average, but we're going to have to wait and see to really start thinking about any sort of a potential wave 5 to the upside. We got to get back above that 10-day moving average and back above 590, and it probably would be prudent just to wait until we got back above the 50-day moving average as well before we start to gain any confidence that maybe that low is in. As I mentioned earlier, it is pretty precarious where the low was today, because this support area here, if that gets broken, you can see the move on the beginning of the wave 3 back in September was pretty vertical, which means there's not a whole lot to hold it here. So had we not had those comments with Chairman Powell speaking at a monetary conference today, who knows what might have happened, other than the fact that we were a tiny bit oversold. If we go to the VIX, we'll look at that first, and then we'll get to the bond market. You can see that one of the things I find interesting about this VIX is we get these big spikes. You can see the big spikes in volatility, and then we get recoveries after that, where the volatility moves back down after the big spikes. Last one we got there was in December, and then minor ones there in January and towards the end of January. But this has been pretty interesting to me with these big bars, meaning a lot of intraday volatility. It's been pretty fun to trade intraday with this volatility. We're a little bit above the 10-day moving average on the VIX, but it's just been kind of climbing, not these wild spikes that we usually get. So just heightened levels of volatility, building. Is this enough? It kind of felt like we needed one of those spikes to really feel like maybe we could reverse and head back down in the VIX, and therefore move to the upside in the markets. But is this building enough of a volatility increase to show that we could get some sort of backing off of the VIX and move to the downside? I find that interesting. You don't normally see that kind of a movement. Now let's go to the bond market. We'll look at the TLT. That's the 20-year. As a quick reminder, the 20-year shows prices and yields move inversely. And then we did have this big tick up in prices, and therefore yields came down. President Trump even referenced that during his speech to Congress a couple nights ago. And then today you can see prices back down, which means yields tick back up just a little bit today, but nothing too significant. Maybe this bounce, that's about what you would expect out of this triangle that we had. We had this perfect, I've highlighted this, so I won't rehash that. Go back and watch the previous recordings if you want to see more about how well Elliott wave forecasted this move down. Just a really classic 5-wave down pattern on the TLT. The more liquid a security is, the more accurate Elliott wave is, and obviously the bond market, currency markets, things like that are extremely liquid. But we had the gap up. We've come back and filled that gap. We moved about exactly where you would expect from this corrective triangle following the completion of the wave 5, all extremely classic Elliott wave stuff. So if the bond market can just calm down a little bit, maybe that could set the stage for a little bit more of a move to the upside in the equities market. I know y'all like the TNX, so we'll show that. Same type of thing here, but it's in the opposite direction, because TNX shows rates. Remember, rates and prices moving inversely. So TLT showing prices up and TNX showing rates down. So there's that little bit of a bounce up in rates, but same thing. We had a triangle here, but instead of after a wave 5, this was in the corrective wave 4 that we had this triangle here. So we had a complex wave 4, also right at the 61.8% level. The only concern here is the fact that the charts are different as far as the Elliott wave labeling. We don't want to see a wave 5 to the upside here in rates. I think that would be problematic for the equities market. If you're wanting the market to go to the upside, you don't want to see that wave 5 come to fruition. But sitting right here on that 61.8% level, we have to respect the potential for that. That would likely mean more downside in the market. And just going back to the SPY real quick, if we were to break this area here that needs to hold around 575, the next target would be down there around 540 or so, just completely retracing this entire Elliott wave pattern if that happens. So pretty important that we get a little bit of a bounce at the beginning of next week. Let's go and look at energy real quick. We'll look at the UNG. I've talked about this. It finally got a wave 5 to the upside here, where natural gas was trying. Every time it would get a little bit of a bid, it would sell off. But now that the data centers are going to be using natural gas, we did have this wave 5 to the upside, and now it's right smack in the middle of this tap box. Time and price projection is labeled by the Elliott wave algorithm in the Hub software. So where does natural gas go from here? Can it find another bid? The issue is it's going to take a while to build all those data centers, and there's really no way to know how much natural gas they're going to need. So this is kind of in anticipation of that. So maybe we consolidate here. The corrective patterns you usually get are flat zigzags or triangles following the completion of a wave 5. So maybe we go into a flat. Some sort of sideways consolidation here. Some people have surmised that maybe we go into a triangle here and then we get another break to the upside and another bid into natural gas. That would be interesting. Oil acting exactly as we've been talking about over the last several weeks. In other words, staying in this big trading range. And I do think that's likely for at least the near to intermediate future with oil. We talked about that as well. The drill, baby, drill, even mentioned that in his speech, President Trump. But then OPEC says, yeah, go ahead, drill, baby, drill, but we're going to cut production to match it. OPEC wants prices to stay a bit elevated. That does entice more domestic drilling because they can actually make money with elevated prices. But we broke out a little bit of that. You know the story. We're back down. We tested the point of the breakout of the triangle. So all, again, classic Elliott wave stuff with a corrective triangle. Where do we go from here? We hit the 10-day moving average on the high today. Perhaps we drift a little bit lower. I don't think we're going to go down as far as President Trump would like to see oil prices, but at least there's been a little bit of a break here. I just think this big trading range is where we're going to be for a while here. Taking a look at the metals, pretty interesting stuff with GLD. Looked like we were going to retrace, possibly start a wave 4. You can see that this wave 3 here is green. Notice it's not the purple color. Those are the waves that are confirmed. This means it's still active. In other words, the algorithm is not sure we've completed the wave 3 to the upside here on GLD. Perhaps we move a little bit higher. You probably would think that we would need interest rates to come back down some more for gold to continue back to the upside. So a little bit of a zigzag here, potentially. If we take out that wave 3, we'll see if GLD can move higher. Right now, it's doing a pretty nice consolidation, honestly, from this breakout move. That was one heck of a move, breaking out of the triangle on the wave 3 and GLD. And so the fact that we didn't give more of it back has to be viewed as constructive or bullish on gold. SLV, if it's going to play catch up, it could possibly take off. This wave 5 to the downside is interesting because it's a completely different pattern than what we have on GLD. And if we are going to move and make a new high on GLD, this wave 5 to the downside is barely still qualified because we're right at the 78.6% fib level, the last bastion of fib levels for a 5-wave pattern in the wave 4. So if we take this wave 4 out on SLV, this pattern will relabel and probably come in tune with GLD. So gold has been the leader. You can see, just like I talked about with the zigzag within GLD, we'll go ahead and draw it here on SLV. A really nice zigzag pattern setting up here on SLV. So perhaps we can look for an aggressive move would be go ahead and jump in. Look where we are, right at a 50% correction on the B wave. And that would lead us up to about 32 on SLV. That would play catch up with GLD pretty nicely if that were to play out. Again, relabeling the 5-wave pattern, that looks pretty solid to me, especially since we've stayed above the 10-day moving average on the last 3 days. So silver looks like a pretty interesting place to look for a bullish trade in the coming week or so. So let's move into cryptos. And they had a big message of cryptos last Sunday with the talk about the strategic reserve. That surprised me. I didn't know why the administration would want to come out and say what was going to be in there and bump the prices up. Seems like they would want to start buying the cryptos before they announced that, but they did it anyway. And we had the big move up. Pretty much all cryptos moved to the upside, but then they came right back down. And now we're just kind of consolidating that. It's like that announcement didn't happen. So now we'll wait to see how much is going to be bought, if they start to buy, when they're going to start buying the cryptos, if that can keep a bid underneath them. But a wave 4 there, right around 50%, could lead to move back to the upside. This area here around 87,000, 87.5 or so was a level that really needed to hold. That was support going back to November, as you can see. And then this move down was pretty swift as this move up here was swift. You can see that we basically gave back everything from that vertical move after this consolidation. So that little bit of consolidation there held on the wave 4. So we'll see if we can mount a little bit of a rally here in Bitcoin and the rest of the cryptos. But we got to get back above the 10-day moving average and back above the 50-day moving average as well. So similar story to what I was talking about with the SPY. Before you can start thinking about a wave 5 to the upside, we need to recover those major moving averages first. Continuing in the cryptos, we'll go ahead and take a look at Ethereum. That's the one that, even though it's included in the basket for the strategic reserve, just can't get out of its own way. Ethereum, it did get a little bit of a bounce, not much, not as much as the other cryptos. Kind of got it up here and bumped its head in this area of congestion consolidation right here and right back down. So you can see it's underperforming Bitcoin significantly here and really in danger zone of a further move to the downside. This wave 3 to the downside also still labeled as active. And that means that we could go quite a bit lower. If I condense the chart in, you can see how important it is to hold right here, because it's a big vacuum below here on Ethereum, and we could see significant movement to the downside if we can't bounce from this area. So that's one that you want to keep a really close eye on. Looking at some of the other cryptos, XRP was in there as well, and we got this pretty nice consolidation here. It's really outperformed some of the other cryptos where we got the bounce here on the announcement last Sunday as well, but right back to the point of that triangle. So again, following along the triangle breakout rules, we broke to the downside, we came back up and tested it, but pretty solid consolidation through here, also a wave 4. So the cryptos are kind of lining up, other than Ethereum, for potential moves back to the upside. Solana, you can see Solana move back down after its big move to the upside, also sitting at a level that really needs to hold. So this one's kind of along the lines of Ethereum. This is an area, I've condensed the chart. You can see how important this area is to hold. And if we break below that, then we're going to go quite a bit lower on Solana. So that needs to hold in this area here and see if we can get a bounce. No 5-wave pattern labeled on Solana. And then to a lot of people's surprise, myself included, Cardano was actually included in the basket, and boy, did it get a nice move. More of a move than any of the other cryptos that I watch, at least. Don't follow all the meme coins, etc. Not saying that Cardano is a meme coin. Not what I meant. I don't go that far in the crypto space. Kind of stay with the bigger names, but really big movement to the upside, but then right back down. And one of the rules, no security in any time frame gets too far from the 10-day moving average. Don't like vertical moves. What goes vertically up often comes vertically back down. Just did all those things. But we are holding right here around the major moving averages, the 10, 30, and 50, all kind of converging here. So maybe that can keep Cardano, because it was also dangerously close to giving all this move back from the election bump that all the cryptos got with a big vertical move. But that was one heck of a move from around 25 cents to $1.25, but holding in there pretty nicely. As we start to move to some stocks of interest, some of you all asked about Apple, and that reminds me, talking about Apple. Actually, I'm going to go to the other U.S. markets first before I do that. So sorry about that. We'll come back and look at Apple in a few minutes. But let's take a look at the other markets. They're going to be very similar. If we take a look at the Dow, the DIA, an area here around 420. We came down there. It just seemed like we needed to come down and test that level, which we did. Important level to hold here on the Dow. You can see these levels where we've bounced here and created the support on 420. So really important that we hold that. Otherwise, we may see somewhere in the neighborhood of 400 on the DIA if we can't hold here. We do have this potential zigzag pattern, but it looks more like a flat. Oftentimes, the setup of a zigzag pattern looks very similar to a flat, and then you have to wait and see how it plays out. But that would be A, B, C here on the flat. It's a consolidation pattern, corrective pattern, and there was the wave 5 that finished on the DIA. If we can break 450, does that 5 move or relabel? I think we start a new impulse pattern. So I feel like this wave 5 is complete on the DIA, and then we've gone through the corrective phase in this flat. And then we'll see if we can mount a new impulsive pattern on the DIA. That's what we'll be watching for. But 420, very important level to hold there. Going to the Qs, we take a look at the Qs. Rates that tick back to the upside a bit. Certainly not helpful here, but not getting much of a boost with rates ticking back down a bit either. And they're going to move with the market. So pretty vertical move to the downside here. Also, though, in a level that could hold. With this wave 4 sitting here. So these patterns are pretty well lined up with the SPY, at least the Qs are. A little separation from the 10-day moving average, so a little bit oversold here. We're in an area of congestion. When you trade through these areas, I don't really call it support resistance. The bounces like we showed in some of the cryptos that really need to hold those levels. Here, it just looks like we're in an area of congestion. Maybe we can hold this and bounce back up. Again, being just a bit oversold from the 10-day moving average. And then as we move into the IWM, and we did it. I talked about this last week. The IWM was our case study consideration for TradeFinder the past week. We had it going down to 205, which is exactly where it went. And that means we had a perfect month in TradeFinder for February. Every single case study consideration that we gave out during TradeFinder was a winner. So perfect month of February. And if you're interested in TradeFinder and haven't signed up yet, you can sign up with the link that you see on your screen. We do it every Tuesday at 1 p.m. Eastern time. So it's live during market hours. We talk the markets. We look for case study considerations. I just mentioned a perfect February. And we have a live Q&A as well. Great community. Love to have you become part of it. So sign up for TradeFinder if you haven't already. But the IWM, the concern here is this wave 3 on the IWM is still green, meaning that's still active. The algorithm not sure that wave 3 is finished yet, but it is back at the point of this triangle going all the way back to July. And then we tested that a couple other times, made the move to the upside, and then form this really nice zigzag to the downside. So if we highlight this zigzag pattern here on the wave 3 to the downside, love trading wave 3s to the downside. It's one of my favorite things to do in our AI impulse strategy at ewotrader.com. Just look at that. Right down to the 100% extension. That's why I like it. Most people educate you to stay away from the wave 3, even though everybody agrees it's the strongest of all waves. You don't really know where it's going to go. My argument is that if you have a zigzag in the wave 3, you do get a good indication of where the wave 3 may go. That may not be the end of it, but we had a pretty good idea that's where we were coming because we had a 50% B wave correction, which yields 100% extension. So just absolutely spot on the IWM here. So this is the outlier of the equities markets. This one has been pretty weak and very sensitive to rates. So we'll see if we get a calming in the bond market. Maybe that can create a bid here on the IWM. I'll get the arrow again because just to show we're still a little bit oversold here from the 10-day moving average. So the completion of that zigzag, an area of support, all those things could help to get a little bit of a bid back in the IWM. That would be well needed. All right, I was teasing you on Apple. Let's go to Apple stocks of interest that you all talked about. And by the way, in your comments last week, thank you for the wishes on staying safe in Mardi Gras. And gosh, there was security everywhere. They had all kind of police, the National Guard, FBI agents. They didn't want a repeat of what happened on New Year's Eve. But I'll tell you, if it's on your bucket list, Encourage everybody to go. Mardi Gras is a blast. Just stay away from Bourbon Street late at night, and you'll stay away from the craziness. Very family friendly in other areas to go. So thank you for those well wishes. It was a great time. But it reminds me that we are doing our giveaway this year, just like we did last year. Each and every month, we're giving away one of our level 3 subscriptions for free. It's not free; it's thousands of dollars, but we're giving one away free here each month. And all you have to do to become part of it is to leave a comment underneath this video. And that registers you for the drawing. It includes our time strategy, which is sideways based. It's an income strategy, counter spreads, butterflies, things like that. We also have the volatility strategy, which is those triangles. I've shown you a bunch of them looking for triangle breakouts. We have a particular way of doing strangles that's really unique. And then the AI impulse strategy, which is primarily those wave 3 zigzags that are infused with AI. You get all three of those subscriptions. One of you mentioned last week about there's a special offer. If you might still be able to get that, I'm not sure. But the AI signals are available as a subscription basis on the Hub software as well. Go ahead and leave a comment this week, and you're registered for this month's drawing. All right, so back to Apple. We take a look at this chart. We're starting to consolidate here. Apple's performed a little bit better than some of the other stocks in the tech sector, the tech wreck, we call it. But you can see this consolidation here. We're building a pretty decent triangle here in Apple. So something's getting ready to happen with Apple. No 5-wave pattern here, as you can see, because we're in corrective mode with this triangle. All three major moving averages at the exact same point, right near the point of the triangle. So Apple's going to break here rather soon. I don't know whether it's going to be to the upside or the downside. You can't predict which way a triangle is going to break, so don't try. You just either put on a straddle, or you wait for the directional breakout and trade that. But it's pretty well formed on Apple. So some of you ask about that. By the way, when I was talking about the comments, I read them all. I respond to as many as I can, time and travel permitted. Obviously, last weekend was away, but love to read your comments. And I can understand why you're wondering about Apple, because nobody really knows where it's going from here with this triangle setup. Looking at some other stocks of interest, I know you want to look at Palantir. So let's look at PLTR, and I'm going to go ahead and bring up the current chart of Palantir since it changed exchanges. So we'll show you where we are right now. And pretty big pullback, needs to hold right here on Palantir, because you can see where the support line is down around 65 or so. It's trying to hold this. It was resistance back here in December and again in January. It's trying to hold it as support. What was resistance may become a new support, and maybe we can get some sort of a bounce. But again, gap up, vertical move. None of those are good. Too far from the 10-day moving average. What goes vertically up oftentimes comes vertically back down. All the trading rules that we talk about week in and week out, all being evidenced here on Palantir. And I hope you all enjoyed the move to the upside and took those gains. We'll see if we can hold this level right around 80 and get some sort of a bounce. But we got to get back above the 50-day moving average, back above the 10-day moving average before we can start talking about the bounce. So kind of the same thing. I would say that uncertainty abounds in the markets right now. So my words, Chairman Powell's words, and all these charts at areas that need to hold, or things could get pretty nefarious. But if we can bounce from here, then perhaps we have something building for potential moves to the upside. Tesla, gosh, there's so much news about that and all the noise going around Elon's involvement with Doge, et cetera. Is he watching what's going on in Tesla? All the comments that you've undoubtedly read. The important thing is that we're right here around 250 now. Because this wave 4 is at 80%, this pattern's disqualified, so this is not a 5-wave pattern any longer. That will go away. We had the descending triangle. We broke to the downside, and we're in an area that needs to hold here right at 250 on Tesla. Perhaps we can get a little bit of an oversold bounce. It's a little bit away from the 10-day moving average, but if we can't hold 250, we're probably coming down here close to 200, and that could happen rather quickly. So this is an area that is really important for Tesla. If you wanted to be real aggressive on a real speculative play, you could look for a potential bounce, but gosh, it made such a big move. It doubled in a very short period of time, and then it halved in a very short period of time. So it gave it all back. So too vertical to the upside. We retraced it all. But the key level to watch on Tesla there is at 250. Looking at NVIDIA, you can see that we have this triangle that formed right there around 140, broke to the downside, starting to get to an area where I think NVIDIA becomes interesting. Seems like it needs to come down towards this 100 level. It's a little bit oversold from its 10-day moving average, but the gap up right here tested it as support back here at the end of the summer, and then again in early fall, and then we broke to the upside and then consolidated. It just feels like it needs to come down and test this level. It doesn't have to, but that would coincide with the expected breakout from the triangle. You measure the high to the low in the mouth of the triangle, and then subtract or add that to the point of the triangle, and that gives you your projected target on these triangle breakouts. So that would be about where you would expect it to go, and it happens to have good support and one of those big round numbers there at 100. Also wanted to show you the stock of the day was Broadcom. Nice earnings report. Didn't quite get the move that we did on the last earnings report, where we had this big gap up, once again too vertical. So we retrace that, we fill the gap, all this stuff you hear week in and week out. I hope you're employing these rules into your own trading regime, because they work. And so we filled the gap. We're back at an area of support here. So kind of the same thing on Broadcom. This bounce here off the 61.8% level on today's earnings looked really impressive if you just looked at the chart today. But notice on the high, we didn't even get back above the 10-day moving average. So we need to break back above that 10-day moving average to see if we can mount some sort of a more sustainable upward move. This is why I don't like the vertical stuff. 45-degree angle moves are what I prefer. They tend to hold. The corrections aren't as severe, all that kind of stuff that we talk about so often in our trading rules. But bouncing off here could be interesting if we can get back above the 10, and I would argue the 50-day moving average as well. Just getting back above the 10-day moving average, I don't think that's enough. We need to get back here above the 215 level or so on Broadcom and see if that continued to the upside. I did want to show you the dollar, because that was pretty interesting this week. Don't often see moves that vertically. I remember back when we were talking about this move to the upside in the dollar, and you don't normally see the dollar trend for that long and that far like that. And now we have the opposite. You don't often see it move this vertically either. So the dollar is pretty separated from its 10-day moving average. And you wonder, is this a sign of economic weakness? We know that we have all of our issues regarding debt, et cetera. But that didn't seem to stop it from moving to the upside when we had all those problems then. So you wonder if this is a sign of further economic weakness. Again, so far, even though the economy is showing some little bit of cracking in some areas, hasn't completely fallen off yet. But boy, that's a big move to the downside. I would expect a little bit of a oversold bounce here. This wave 4 holding right at that 78.6% fib level. It needs to hold right here if this Elliott wave pattern is going to play out. I'd be fine if it didn't. I'd actually like to see the dollar stay in this range and just kind of consolidate this big drop and go sideways. That would actually be constructive for the markets. We're already hearing companies, or the next quarterly earnings are a ways away, but you're hearing groaning of the exchange rate causing problems with this big move to the upside. But maybe this move down can help squell that a little bit, and maybe it won't be as quite of a negative on the next quarterly earnings as it would have been without this big move to the downside. But pretty wild there. I did want to finish with the INDA. And you can see here that we're trying to get a little bit of a bounce here on the INDA. It had this really nice zigzag to the downside. We broke below 100%. It doesn't have to go to 161.8 because 100% extension is where it's supposed to go. 50% B wave correction yields 100% extension. You know that by now. When you break that 100% extension, sometimes you get an extended C wave. So you look at the next fib level, which is 161.8. But we're trying to bounce here, but it's a little bit of a weak bounce, which makes it suspect. Would not be surprised to see us come down here more towards 45, 46 on the INDA before this is complete. But if we can get back above that 10-day moving average significantly and back above the 50-day moving average, perhaps that's the end of that wave 3 to the downside, and we at least get a wave 4 bounce, if nothing more than that. Thanks as always for watching. Have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.